Hey guys, welcome to another video. So today we're going to share about 9 stupid, useless investment wisdoms. So as long as you're a beginner in the investment field, right? So you really want to turn on TV, go to Bloomberg, or go to surf on the net. So see what kind of wisdoms that people in the past that have experience in investing can tell you about, right? For example, when you invest in a stock, when you start losing 10%, so you should cut loss. Something like that are all stupid, right? Because throughout my 20-year investment career, I've tried all of those, and all of those which are not going to work, I will share it with you today in this video. So first of all, if you're new to my channel, please subscribe my YouTube channel and my Facebook page. Please like and share this video out to your friends if you find it really useful to your friends, especially for beginners. Even for those who are experienced, they even don't know that there's some wisdom that they're still using in investment, but they're completely useless, right? So please, you can share that. If there is any questions, please find a pen and pencil and jot it down. So leave me a comment below. I can reply and answer your questions one by one. So please subscribe to the channel, okay? So I can walk with you in this path by uploading more of these videos, so you will hit something right. So the first myth, the first wisdom is blue chips are something that you should invest if you're a beginner, right? That's so wrong, right? It's always about the profit. So as you can see, Yahoo, of course, you know this big stock, right? And Bank of America. As you can see, if they're going to drop, if they don't have the profit, they can like fall like hell, okay? They can drop like 90% of the stock price. So this is really a myth. Because nowadays, the world is changing rapidly. The formula of being a blue chip is really outdated. So some indices tend to overweight the market cap. Some indices really tend to overweight the growth, or they're being too reluctant of kicking out the blue chips that are not performing or they're underperforming. So buying blue chips is pretty much a bias nowadays. So pretty much it's about, oh, it's big enough, the turnover is big enough, so that's pretty safe, but doesn't mean that you won't lose your money or it will profit, okay? So this is the first one. The second wisdom is buying stocks that have really large of a market cap will not move at all. So in your face, bam, here you see Apple, Amazon, Alibaba, they have the most market cap in the exchange, okay? So for example, the stock I like Amazon, right? I have another video last week talk about Amazon. In fact, 3 months ago, I suggested Amazon. Again, this is a really good time to buy because this is a good stock, but I have to wait for right timing in charting, so to suggest to you guys. And now, wait up is now $900. So there is a really big market cap company, right? It's going up like crazy. So for example, Verizon, they pay really pretty high dividend, right? I suggest you can buy Verizon. Okay, that is for a long-term investment. So people say that buying a large market cap won't go up a lot, or even or going down. So you see, Goldman Sachs ran down from $250 to up way below $100. And Verizon, also the same case, but it went from $20 to now almost $56 highest. So there's another example. Large market caps are not indicators of profit or loss. Mainly, it's about no matter how large the company is, it depends on how good they can use every single dollar on the hand. So for example, Alphabet, they're composing of more than 200 startups inside. So they're trying to spend every dollar right, okay? So some small market cap companies, they're spending the money unwisely. Some of them would maybe holding 30% of the cash just buying some products for dividend or interest, right? That's pretty dumb. I'm buying you because of the stock price. I'm not buying you for the dividend, right? For the dividend that you're getting dividend from somewhere else and paying back to me. That's pretty stupid, right? So leading us to the third wisdom, that is penny stocks are easier to move up and down. So you should profit more, right? So that's wrong. Because at the beginning of my investment career, I speculate in penny stocks. The only chance you can win, you can profit is about networking. That's it. Or you have a lot of money. It's never about skill set, right? So, oh, I see this pattern. I know people are leaving the market, so I will just leave. I see this pattern. People are going to buy the stock, so I will just kick in. If that's that simple, right? That's not that simple. That's not even close to the story. For example, there are many financial adjustments behind the stock, for example, splitting or reverse splitting. And in such case that, if we see a big and beautiful candlestick with a high, with a large turnover and volume, so that must be a buy signal, right? That's wrong, because in this case, people are doing reverse split. For example, it's reverse split of 1 to 1. So if there's $2, obviously it's going to $4, and there could be large trading volume. So if that's a buy signal for you, that's wrong, because that is nothing to do with the profit and the income statement of the company. It's just purely financial adjustments, okay? So that's it. Moreover, the second case that, if they are not doing the splitting or reverse splittings, even though it's about how much of a share is controlling in one party, okay? If that's the case, you can never see anything in the charting nor in the statistics, right? So you have to be careful of that. So the fourth user's wisdom is, so you buy a stock, if it's losing for 10% or 15 or 20%, you should cut loss and step back and think about what you're investing, right? It sounds pretty stable and makes sense, right? But it's not, because the market is about market. The market is never about you or me, okay? I'm nobody. I'm not that famous, right? So if I buy something stock at $10, so what does it mean for the market to adjust at $9, right? That's nothing compared to the market or compared to the company or the profits, right? That's nothing. So that is one of the things I heard of, and it was kind of makes sense, but after a couple of attempts, I thought that, it's kind of stupid, right? So don't follow that. For example, Bradley Corp. This stock is now for almost $40. So if you say that, I buy it at the top, and then I strictly follow the 10% rule, and I cut loss at this level, which is around $35 to $36. And then, bam, the moment you cut loss and the moment it goes up, okay, it's now $40. So about $5 opportunity cost, you have lost it, okay? The other case is before that. There's another case that is dropping for 10%, you cut loss, and in the end, it dropped for 2 more days and then rebounded. Up to today, that is the $29 level. Up to today, we'll never see this bottom again. So this is another story. So might as well, if you can align a trend line to these 4 points, that is a really strong support. Because the first point, the second point, and then the third and then the fourth point should be the strong support to you to buy in. That is the case, that is the technique that you should use in this stock specifically. The fifth wisdom is you should always sell your stock at the area that have most tied ups. So what are those areas? Those areas are like always, there are two conditions to those areas. First of all, they're the peaks. Second of all, the peaks with lots and huge trading volumes. So that means many of the armatures of the investors had already invested in these stocks. So the moment the price rebounds to that level, so you should exit, because people will sell the stocks like there's no tomorrow, right? So that's wrong, okay? For example, this case, that's another US stock. For example, you bought this stock at $70 a share, and then the next time it rebounded to the 71 level, but because you see the trading volume was kind of large here, right? You suspect that there are many of investors there waiting to sell the stock. That's wrong, because technically, if you see a really beautiful candlestick hitting above this level and coming back down for support and then rebound, it is really good charting signal, okay? Second of all, this period is more than 6 months. If there are more profits inside the company, that's a completely different story to the financial statements behind the company and the stock. So then today, $70 is completely different. It's kind of undervalued compared to the $71 6 months before. So you have to understand that. So the sixth wisdom is what? Is always buy lagging stocks. So that is, I think, one of the most ridiculous things that I have heard, but I followed and traded, okay? That is completely wrong. For example, I will be running with LeBron James, okay? So you know that LeBron James can go full court with 6 steps or 5 steps, right? I think 5 steps. Let's say we make a race, okay? So we started the race, and then almost toward the end, I was lagging behind a lot. So as an investor, you invest in me, you're so wrong, you can't be more wrong, okay? So that's the same case in the investment field. For example, we have the Dow Jones Index with the Wells Fargo's, and now the company that is inside the same industry, that is Bank of America, BOA. So these two stocks, you see that Bank of America, ever since the 2008 financial crisis, it rebounded to less, right? It is really underperforming for more than one half. So if you buy lagging stock of BOA, it should be giving you a profit of at least 2 times, at least double, if not triple, okay? That is wrong, because Wells Fargo's in the Asia side of the market, I always say that you should buy the American banks if it is going into an interest rate hike cycle. And the best stock, if you look at this financial statement, is Wells Fargo's. If overall, the earning reports are completely different. Wells Fargo's is not too good, but it's pretty stable, okay? Compared to Bank of America, it's earning less and less and less. And this statement that I made in 2012. So 2013, 14, 15, 16, they're proving me right, okay? So it's about what you are investing inside the company. It's not anything about with your own eyes. With, for example, buying lagging stocks, that's not the case. So the seventh wisdom is the most confusing and head-scratching valuation model that you may have heard of, but it doesn't work, right? It works, but you don't work it this way. It's the PE ratio, price to earning ratio. So the lower this number is, the cheaper the stock, right? The higher this number is, the most expensive the stock is. Because after all, we see that Amazon has a PE of 188 times. So why I'm still suggesting in the channel? I made this suggestion 3 months ago. And I've been buying this stock for more than 2 to 3 years. Visa card, Baba, they all have high P ratios. It's not about solely the P ratio, it's about the growth. So that is why the Visa card, when at the time of 2009, the P ratio is already 40 to 50 times. So now the company, the stock price have gone up from $10 to now almost $100, and the P is still 50 times. So same as Amazon, from $400 to almost now $1,000. That is exactly why, because when you invest in something, it's about the growth. Have you ever seen Shark Tank? It's also the same. It's not about the price of today, it's about the growth of tomorrow. That is why the P ratio is useful, but you really have to merge with something else and incorporate into this model, other than just solely using P ratio alone. That will bring you losses, okay? So everyone is about the technical analysis. There are many stupid and useless technical analysis that people even don't bother back tests, okay? So suddenly one day a boy lost a lot of money for a long period, so he just suck it up and pull up all the data and put it into Bloomberg and Excel and do back testing. That is me. So one of the easiest and dumbest wisdom is 3 white soldiers and 3 black crows. So what does it mean? Some people say that, oh, after 3 black crows, that is 3 consecutive bearish candlesticks. If for 3 white soldiers, that is 3 consecutive bullish candlesticks patterns. So when we see 3 of those, that means it's time for the trend to reverse. So when you see 3 black crows, so you should buy. When you see 3 white soldiers, you should sell. That is wrong. So if that works, so how come there are 4 black crows, 5 black crows, 6, 10, 20? Why? For example, if that's another stock has been going up from $10 to $17, it's 70% growth, okay? So you see, this is 6, even 7 crows. This is 7 or 8. So you see, this is 2 white soldiers. This is 4 white soldiers. If you sell it, okay, it's going down in the short term, but then it goes up and up. I'm not saying that it doesn't work. If it doesn't work, I can do it reversely, right? So if the probability of this work is 10%, I can do it in reverse. That's pretty good. The chance is this is only 50-50. It will have no place in your investment analysis. So please understand that. For example, Disney. So if you see 3 white soldiers and you sell it, for example, this case, or this case, you will be really sorry. For example, this case, 1, 2, 3, 4, 5. 5 soldiers, and then you sold it here. That is which is $102, and now it's $116, okay? So you say, oh, same as lagging stocks, right? If you lead too much, you will come back down. That's wrong. That is the sixth stupid wisdom that I just shared. So you can rewind the video and look at that. Lagging and leading has nothing to do with the potential. That is the different story. Because we are not speculating, right? Because when you speculate, you're trading your money and also your time. If you invest, you can, first of all, you make sure you don't trade your time. And secondly, you can make sure you hold long enough. If you do your homework right, you have more skin of the game, okay? So the last one is sell in May and go away. So the traditional wisdom is that you will sell all your stocks and come back in November. So that means if you sell your stock in May, then the prices in November should be lower than May, right? Every single year. So we can do a statistics. So statistically, if that's true, you can divide a year into one half, and the chance of that half of going up or down should be 50%, right? So let me do a statistic in Dow Jones, Nasdaq, and S&P 500. The probability of that works is 35% to 45%. That is really close to 50%. That doesn't work. Don't do stupid thing. Don't do stupid thing. So in the Chinese video, I have one specific episode that I will publish every Saturday is purely statistic and backtesting. That is one of that. So the formula behind is the lowest of November is lower than highest of May. That is really fair already, right? I'm giving that the highest point in May, you can sell it, and you can come back at the lowest point in November. And then we put it in the Excel and the program and to do the algorithm and backtest. And that even proves that that is not working at all. So for example, you want more of these episodes and video, leave me a comment below. I can launch another video as long as you guys are watching. Okay, so there's some educational video, so hopefully you can bookmark it or watch it later again or watch it later now. But please subscribe to my channel and like my Facebook page. So more of this video will be published and uploaded. I will make more of these videos for you guys to watch, because for those mistakes, I made those mistakes. For the research that I have done, is inside my mind already. So it's just that, do I have time to make the video, okay? So I'm really thankful for all the new subscribers now. So it's less than 6 months, it's almost 500. So hopefully that my English is not a barrier, because my big belief is investment is a global language, it's a global movement. So please, hopefully you guys will not fall into the same traps that I've been falling into, okay? So I will post more of these videos up. So upcoming, I will go to Malaysia for another seminar and class and the courses. And then in summer, I'm going to Toronto for the courses. So if you want more details, so you can leave me a comment. If not, I will see you in Malaysia or Toronto. So maybe New York or Vancouver, I'm not sure. So I'll see you then, or I'll see you online. Before next time, I'm Gregory C. Please subscribe if you haven't already. I'll see you next time. Goodbye.